So this is the last video for chapter 4, and I'm going to be looking at problem number 21. And in this one, we're applying overhead using a predetermined overhead rate, but we have multiple departments. And they tell us that the predetermined overhead rate in the preparation department is based on machine hours, and in fabrication it's based on direct labor hours. And then they give us the estimates that they made at the beginning of the year. They tell us that job 127 was started on April 1st and completed on May 12th. They give us records with the information related to that job. Then they ask us to compute the predetermined overhead rate for preparation department, and then use the rate, compute the rate for fabrication. So we'll start with preparation department, and then we'll go to fabrication. So your predetermined overhead rate is your estimated overhead for that department divided by the estimated driver for that cost. And so first we have to look at our estimated total manufacturing overhead. And they tell us that fixed manufacturing overhead is $256,000, and variable manufacturing overhead is $2 per machine hour, and there's 80,000 machine hours. So our estimated overhead for the preparation department would be $256,000 plus 80,000 times $2 or 160,000. So 416. This is our estimated overhead. And then our estimated driver for the preparation department, they told us that the driver of overhead, in other words, what's making that cost go up, is, I gotta look back, direct labor, no, that's fabrication, machine hours. And so machine hours is our driver, so 80,000 machine hours. And then if we look at our fabrication department, hang on, I gotta get rid of those. Our fabrication department has 520,000 fixed overhead and $4 per direct labor hour. There's 50,000 direct labor hours, so 200,000 is our estimated overhead. The estimated driver is our direct labor hours, which is 50,000. Now keep in mind, as we talk about this, these are estimated overhead, estimated driver. So our predetermined overhead rate, and I told you guys in the previous video, I'll start abbreviating these things because we'll be using them a lot, is $5.20 per machine hour. This one, we take our estimated overhead divided by our estimated driver, and it's $14.40 per labor hour. Now, what that means is for every machine hour in preparation department, we apply $5.20 of overhead. So if we work 80,000 machine hours, we will have applied $416,000 of overhead in this department. In fabrication, for every direct labor hour we work, we apply $14.40. If we work our estimated 50,000 hours, we will have applied $720,000. Now remember, they're estimates, so you're not going to get it right. You're going to have some over or under applied, but that's where we start. Then they ask us to compute the total overhead cost applied to job 127. So we're looking at job 127, and we know we're doing $5.20 per machine hour. And if we look at our job card given to us in the problem, we see that in the preparation department, we worked 350 machine hours. So we take our actual machine hours, 350, and we multiply that times our predetermined overhead rate, and this is our applied overhead for the preparation department. And then we look to see what our direct labor hours were with that job card, and it was 130. And we know for every direct labor hour, we apply $14.40 of overhead. So that's the applied overhead in the fabrication department. So those two added together give us the applied overhead. Okay, then it asks us, what would be the total cost recorded for job 127? So if you had a job cost card for job 127, you would have direct materials, you would have direct labor, and you would have manufacturing overhead. Now, keep in mind this overhead that we have on the cost card is applied, not actual, because we've got actual overhead accumulating in a control account, but we're applying it based on our estimates as we produce our units. And so we're given all of the information we need in the problem. 940. Now, this is in the preparation department, so I'm still using these headings here. Direct labor was 710. Again, that was given. Manufacturing overhead we calculated right here. And then again, using information from my cost card, 1200, 980, and then 1872, which again was calculated right there. And so if we add those together, I don't know, I'm using a Mac, I'm not as familiar. There we go, it did sum that for me. So in the preparation department, the job cost $3,470. In fabrication, the job cost $4,052. And so the total cost of the job, and we can sum across, let's see if my Mac's smart enough to do that. So the total cost is $7,522 of the job. That's the number we're looking for. Then it says, if the job contained 25 units, what would be the unit product cost? So our unit product cost, if there are 25 units, would be the job cost divided by the number of units. And that shouldn't be $1. Or $301 per unit. And if you're doing this in Connect and they ask for 2 decimal places, make sure you're paying attention to that. And then it says, at the end of the year, the records reveal the following actual cost and operating data for all jobs worked. So it asks us what the underapplied or overapplied overhead was. And so first we have to figure out what did we apply, and then we have to figure out our actual. Now remember our applied, okay, let me note something here. All of this in this highlighted area is one job. What we're looking at now in part number 4 is for the whole company, so keep that in mind. So the applied overhead, remember in this department it's $520 per machine hour. We worked 73,000 machine hours. So that's how much overhead we applied there. And then we look at our company as a whole and we see we worked 54,000 direct labor hours in fabrication. And so that would be the amount of overhead we applied there. So we applied $379,600 plus $777,600. Is that right? Yep, that's right. Okay. And so then we look at our actual overhead and we see it was $390,000 in the preparation department, and it was $740,000 in the fabrication department. So, sorry about that. It's my daughter texting me. I need to turn that off. And so we applied $379,600, but our actual was $390,000. So we underapplied $10,400 in that department, preparation, and then we applied $777,600. Our actual was $37,600. So overall, I hit the wrong button. We over applied $27,200. Now, is that a lot? Well, if you take it as a percentage of your total, our total overhead was $1,130,000. So just for fun, let's see what that percentage is. it's 2.4% that we over applied. That's not too bad. Remember that over applied has to go against our cost of goods sold. So if we over applied, it means we have too much allocated to our cost of goods sold, so we have to decrease our cost of goods sold.